Hey everyone, welcome back to Corporate Decoder, the place where we put the power of big business under the microscope. And today we are peering into Southern Power Company's recent activities. And spoiler alert, it's all about the money they announced, some major new senior notes, and we are going to break down exactly what that means for the company and what kind of message it sends to the market. So what exactly happened on the 16th of September 2025? Southern Power Company announced they were issuing a massive amount of new debt in the form of senior notes. They are issuing $550 million worth of notes that mature in 2030 with a 4.25% interest rate, and another $550 million worth of notes that mature in 2035 with a 4.90% interest rate. This is a total of $1.1 billion in new debt piled onto their balance sheet. Now, this is their only debt. We can see here, for instance, they have Series 2016 B senior notes due in 2026 with an interest rate of 1.850%. This new debt they are taking on carries significantly higher interest rates. This tells us a few things about the current economic climate and how Southern Power is positioning itself. Higher interest rates mean borrowing money is more expensive. The fact that they entered into these underwriting agreements with quite a few major financial institutions shows that they really wanted to make sure this significant debt issuance was handled smoothly. These agreements are essentially contracts that lay out the terms of how the banks will help sell these new notes to investors. So why take on all this new debt? The filing mentions these notes were registered under the Securities Act of 1933. Usually companies do this to fund growth projects or to refinance existing debt with better terms. Given these are substantial amounts, it's likely for significant capital expenditures, perhaps new power generation facilities or upgrades to their existing infrastructure. It signals a belief in future growth and the need for capital to support it. Now, here is something interesting. The filing details several exhibits, including tax opinions from Troutman Pepperlock LLP. When a company issues debt, especially in large amounts, getting tax opinions is a standard but important step. It assures investors that the way the debt is structured is tax compliant, which can make the investment more attractive. And we also see consents from the same law firm. This is basically them saying, yes, we stand by our legal opinions regarding these notes. It adds another layer of credibility to the issuance. These are the kinds of details that professional investors scrutinize to ensure everything is above board. Let's talk about the signature. Melissa K. Sain, Assistant Secretary, signed off on this report on the 19th of September, 2025. This formalizes the company's official reporting of these major financial events. Looking at Southern Power Company with this new debt issuance, it is a clear sign they are actively investing in their future. They are not standing still. The higher interest rates compared to their earlier notes suggest they are either accepting the current cost of borrowing for strategic expansion, or maybe rolling over older, lower interest debt into these newer, higher yielding notes. It's a calculated move. The company is betting on its ability to generate enough revenue from its future projects to comfortably cover these new interest payments. One key risk here is always interest rate hikes. If they planned these issuances and then interest rates climbed even higher, their borrowing costs could become more burdensome than initially anticipated. Also, the success of these new notes heavily relies on investor confidence in Southern Power's long-term strategy and its ability to execute on its growth plans. Ultimately, Southern Power appears to be in a growth phase, using debt financing to fuel that expansion. They are making a significant financial commitment. The real test will be how efficiently they deploy this capital, and whether the new ventures they fund can generate the returns needed to service this new debt comfortably. It's a bold move, typical of utility companies needing massive investment for infrastructure. Alright, that is our breakdown of Southern Power's recent debt issuance. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description. Thanks for watching, see you next time.